All right, welcome, Master Brokers. Great to see everyone. Welcome to the Coral Ridge Yacht Club. Apologies for the ballet issues, but this is the place to be tonight. What can I tell you? It's so popular that we had a little backup. So this is our third major event of the year, and we're so excited to get started. Before we do, I want to take a quick second to introduce some new members for whom this is their first Master Broker event. So when I recognize you, please stand up and accept some applause. Master Brokers, please join me in welcoming Donna Carbonara, Jeff Carillion, Heather Costa in the back, there you go, Robert Risotto, Tony Valentino, here, and Ashley Vespar. Welcome to all new Master Brokers. We have an amazing program in store for you tonight. Here to get it started, please welcome your chair of the Master Brokers Forum, Carolyn Block-Ellert.
Thank you, Jason. It's so nice to see everyone. It's been a little bit of a moving target getting scheduled, and I appreciate everyone. For all of you that were able to attend, we had a little juggling around Hurricane Milton. It's been a challenging weather existence in our lives and calendars, and we look outside, it's a perfect example. We're grateful that we live here. I was thinking this morning when I was going for my lovely walk, it had just started spritzing, and then the sun came out, just started spritzing, the sun came out, and about a mile out from my house, it was like the monsoon of monsoons. And I was thinking, I'm grateful to live here, and I thought just, for a little bit longer. So thank you all. I am very happy to be back at Coral Ridge Yacht Club. It's a really lovely venue. I am appreciative to my client and friend, Adam Adachi, who could not be here this evening, who sponsored us from the membership aspect, and unbelievably grateful for Rich Campanella, we're going to hear from Rich and City National Bank shortly, but Rich, has been a partner and a great supporter of, I'm looking for you, but you're right here, 19 years. Did you know that? 19 years. And a lot of deals along the way, a lot of magic, a lot of information. So I'm hoping if you haven't reached out to Rich to learn more about what they're doing, it's a very volatile market. We've been through different types of markets, all different financing exercises. Rich has supported me through houses and businesses and all the rest, so I'm grateful for that. I would love to introduce, before we bring Rich up, City National Bank, Joe Tunk, to tell us all about the bank.
Okay, thank you. Jeffrey. Would take that.
Yep.
All right, well, I appreciate it. So I only have a few minutes. I'll probably go through these slides pretty quick, but I appreciate with the partnership and what a great topic, so relevant in today and what we're hearing today. So I appreciate the partnership that we've had with this organization and allow us to sponsor us today. I've only been with the bank for a couple months now, right? So I've been in business now for 32 years. A mortgages, of course, Rich saw this. He had to say he was here for 33 to beat me, right? But one of the reasons why I came here, if you kind of look at the next slide here, is like the stability of this bank has just been amazing, right? So if you kind of look at, if we go to the next slide here, like who is City National, right? So as a bank, we're a $26 billion bank, and this is it's kind of like in the Goldilocks zone. Right, so we're not too big where you just get lost in the mix, but we have the financial stability to really make decisions, right? And if you kind of just look at like who is here representing us today, we have people from credit, we have people from private banking, we have obviously Rich here, and we're nimble enough where, when we have a customer that makes sense or needs our help, we can have those conversations one-on-one to kind of make sure those things happen, right? We have our bank. Okay, if you go back to the previous slide, I apologize. But primarily we're in Florida, right? So that's what you guys are all working on getting customers in this area, where we are, obviously focused on most of our banking. We've been here for 78 years. We are in the top 70 of all commercial banks in the United States, and we're the third largest bank based in Florida. All right, I can go next slide. But if those financials weren't enough, we're also actually owned by a parent company, BCI Financial, which is the largest bank in Chile. So we're a global presence. We have banks in Chile, we have banks in Shanghai. Our total assets, when you combine, are just over $100 billion, right? So we have that financial might secure that we need. But we're also, those customers that are coming from Chile here, they need banking needs, they need real estate needs. So hopefully it's a reciprocal type of relationship between the two. You can go ahead to the next one. But one of the things that I think I pride ourselves on is that, we can be, when we take a mortgage, we take a more holistic approach, right? And so Rich is going to go over some of the products, but when we talk to our customers, we're not just asking, hey, how much do you make? What's the next question, right? We're really trying to uncover the needs when we take those applications. Because what happens here is we have other opportunities to help our customers out, right? So it's not just looking to do a transactional opportunity where we're looking to, hey, we got you here, boom, and done. It's a holistic approach where, hey, if the customer is a corporate account, we can make that introduction. If we need to have commercial banking, we have an HOA association. So we actually have HOA banking, which obviously would say subject. We have a banker here that hopefully you guys got the chance to meet him earlier today. But you can go to the next slide. But we have, as you deep dive, these are some of just the products that we do. So when a customer comes to us for a bank, and when you refer a loan over to Rich, we have all these other needs that we're hoping we can uncover, right? So it's not just one typical type transaction, right? So, we take a more holistic approach to our customers. When you do refer something over to us, we do hope to not only just uncover the mortgage needs and kind of help with that, but also if there are other lines, these are a whole different bank. We're a full consumer bank. We're a commercial bank. We have private banking. We have all the other banking needs that our customers need. So when you do refer a customer over to Rich, they're in great hands, right? So with that, we have obviously some very if we go to the next slide over to Rich, we have some very competitive mortgage products where Rich is going to kind of deep dive into, but just want to give a high-level overview of our bank. And again, I thank you very much for the partnership we've had. It means a lot to us. Thank you.
Well, I want to thank you guys all for coming. Oh, looks like we filled up pretty good. Can't hear? All right. So, what a year. It has gone from COVID highs where we were 50%, 60% increases in housing and things just were flying off to roll right into high interest rates, insurance problems, throwing 2 hurricanes and valet parking, trying to get in here tonight. So it's been interesting. Speaking of hurricanes, we are a local bank. How many of you guys had problems closing their loans last week or the week after? You have deals at out-of-state banks, we had no problems. We're local. We had guys out that as soon as the storm ended, we had guys inspecting our houses. I closed every one of my deals on time, and the reason is we are in the community. We understand. We knew Broward and Day didn't get hit, but we were going to need inspections. We ran out. We did everything. Everything was done. It's one of those groups where our head of underwriting back there, Jimmy Money back there, everybody who haven't met him, there he is. And he gave us our marching orders. We ran out, we did our inspections, we closed our stuff on time. And that's important. I mean, I got calls from a couple realtors saying, could this be possible? And yes, that is absolutely possible. If they're not a local bank, they don't know what happened here. They think they watch the news. I got calls from every relative throughout the United States that I needed to get out of Florida today because it was going to be terrible. So what I'm going to go over is just our slide, and if Jason go to that next slide, about our products, and that's my piece is our residential products and what we offer. Most of you know I was with a big bank for 30 years and just couldn't take it anymore. I had to go to a bank that really wanted to do business, and they brought me in here, and I'll never go back again. It's just a great place to work. We offer everything under the sun. I'm going to start with our conventional loans. We do conventional, FHA, VA. We have absolutely no overlays on these. On top of it, if you don't know, we are one of the best priced conventional FHA, VA lenders out there right now. We're in the top 10% of how low our rates are compared. They're very competitive. They do a rate check every single week to see where we're at. Very low closing fees. We get them done quickly. We have a team that just does that. It's excellent. And for those that you don't know, the FHA, the conventional limits are going up. Rumors are 802, 803. We're closing them right now at 795. We'll close a regular conventional loan at 795. You have somebody. They're supposed to come out in the next 2 weeks, so we'll go up to whatever the full price is. They're saying 802, 803, which should definitely help in this market because you can't buy any for under that right now. Our City Smart product. We have a first-time home buyer product. It is income-driven. It could be area-driven depending what the income is. It's a 3% down program. We give $5,000 towards closing costs. No mortgage insurance is one of the best programs that's out there. It is, if you have somebody that fits, if you've got one of those high-end customers whose kids just got out of college, they want to buy something, where it's not a Fannie Mae product. It's a conventional portfolio product. So if you've got one of those condos that doesn't have enough reserves, we have a lot of different things we can do with this product. We look at the customer. We're not looking at just what's in there. We don't look at the Fannie Mae guidelines. We look at what the customer looks like and what we can do. We can do these loans with DAP programs, down payment assistance programs. Where's Ben? Ben, what's the down payment in Broward? Is you can get up to how much? You can almost get 100,000, between 80 and 100,000 down payment assistance for some of these clients. So if you've got somebody that falls in that bucket, everybody wants to do the $1 million deals, but if you got that one falls in, it might be a great product for you. The rate on that is 5.875 was yesterday, and I think we also have our next product, which is City Smart Workforce. The City Smart, first-time homebuyer product. Workforce, they can have owned a house before. They can own a house up to the time of closing. So if you've got somebody who's closing it, the Workforce, the pricing is a little higher, but it's the same product. You get a $5,000 credit towards closing costs, rates around 6 1/8, no mortgage insurance. It is a great product, and we do a lot of the condos in the area. You can't buy much for the income limits. You're really looking at condos and small houses, but we do. I think Ben closed 10 this week, 10 this month of them. It's a great product. I got to get a plug in there for one too. A relationship bank. We will do stuff that is very outside the box. We're very competitive pricing wise, but we'll do stuff that's outside of the box that other lenders, I constantly get referrals from other banks that cannot do them. They just look at this little box and say if they don't fit in there, especially right now, they won't do anything. Well, I got Jimmy Money on speed dial back there, and we have something that makes sense. If we have something that makes sense, somebody who just sold a company, if I just had a customer that came in who got turned down by a big bank, is closing on a new construction condo next week. They didn't like that. I don't know what was wrong with it. It is a perfect deal. I look at it and we have it approved 15 days. We're ready to close. $5 million deal. We love those deals. Where's Fedra with my wealth? Fedra's my wealth partner. I brought that client in. Fedra's opening the accounts. We're just like Joe said, we're a full service bank. It's not just looking at that customer for that transaction. We want to be their bank. We want them to go back to you and say, thank you, because I've got a relationship now. It's not one of those kind of, oh, they did my transaction, they moved on. We don't look at it that way. Our doctor and dentist program. Osborne, where are you? All right, there's my Osborne. So we have a doctor program. Our doctor program is second to none. We have 100% financing up to $1 million, 95 up to $1.5 million, up to $2 million. We're at 89.9. No mortgage insurance. We're one of the few banks that will do 2 months reserves. That's all we require for these doctors. If they're just out of school, and their student loans are deferred for over a year, we don't count them against them. We don't care how long the doctor's been out of school. A lot of Truist, TD, they've got a 10-year limit. We don't look at that. We don't care. We look at the doctor. Once I get done with the mortgage, Osborne takes care of everything else. He's got all kinds of products for these doctors. They understand, they have a specialty group that just deals with these doctors. That's all they do. They know everything they need. They can actually look at financials of a new doctor and tell you what they're going to make. And if it makes sense, we'll do that deal. So I have a doctor that just came out of school, that just came out of working for a hospital, opened up his own practice, is starting off its own practice. There's no real way to see. He doesn't have 2 years of income, but we can see what he made before. We know if the worst case scenario, he'll go back to the hospital. We'll use that income and take a look at that. We look at all those things. If it makes sense, won't tell you we'll do it for everybody, but if it makes sense, we will do that program. And again, we're relationship banks. We're looking to move him into our little fold here. CPA and attorneys loans. And is Gersten here? I thought I saw Gersten. Maybe not. So we have, everybody has a doctor loan, or a lot of lenders have doctor's loans. We've got a CPA and attorney's loans. Now, there's some attorney's loans out there. I promise you there's no CPA loans. We will go up to 97% financing up to $850, no mortgage insurance, 95% up to $1 million, and 89 up to $2.5 million, and 84.49 up to $3 million for these guys. We will do it on CPAs. Doctors will, same thing for our doctors. In this program, we will also do second homes. We can put a doctor in this program and do a second home if you've got a doctor buying somewhere. We have a ton of doctors down here. I just had a doctor buy a house from Boston down here, a second home. We'll do that type of loan. I did 89.9% financing for him on that house, on a $2 million house. So it's a great program, no mortgage insurance. Again, we're looking to build that relationship. We're looking to introduce them into our products and capture that business. CPAs, again, we're one of the few people that have that CPA program. What a great referral source for you guys. Once you get in with that CPA, you go to your CPA for everything. I mean, any transaction you're going to do, that's who you go to. They're a great referral source for us and for you. If you got somebody, you get us in that, I'll go in and talk to their practice. I'll explain everything with them and go through it. We'll bring one of our wealth people in, and you'll have a referral source for life. Lot loans, construction loans. We have a lot loan. We'll go up to 50% financing. It's a 2-year balloon. We look at the lot loan as a tool to get the construction loan. It's not a long-term play. It's a 2-year interest only. We'll do a interest only for these people for a lot loan. 50% loan to value. We'll roll that into a construction loan. We have a construction loan. I just closed a $25 million one. We'll do 50 mil. We're very good at our construction department. We love those big loans. There's very few you can build for a lot less than that. But with the construction loan, it's interest only. It's a one-time close. They close at what today's rates are. We lock them in, one-time set of closing costs. We'll roll them into the construction loan. But what I really want to talk to you about is our rehab loan, which we're seeing a ton of these days. So you've got that house that's been sitting on the market. The roof's not great. The windows leak, or the electrical box. They can't get insurance. How many of you had no insurance? You can't get insurance, or the insurance is $30,000, $50,000. We will do a rehab loan for them. It's just like a construction loan. We need the breakdown of what they're doing to the house. We will put that money into a GL. We have to have a GC that's actually working on this. We have the GC has license. We'll put that money into an escrow department, and we'll let them close on that house with builder's risk. They finish out, and we'll let them flip it over. We're one of the few lenders that will do that loan, but we're doing a ton of them these days because there's so many houses that they either can't afford to fix them, they don't want to fix them. It's a great time to look at this kind of product or help to market what you've got. We also do bridge loans. We have bridge loans that if you got somebody who has a house that's been sitting, it wasn't popular a couple months ago because they were flipping. Now we're seeing a lot more of these things sitting on the market. You got somebody who wants to buy something else. We will do a bridge loan. It's same type of loan. It's a 2-year balloon. It's interest only during that time. We'll actually give them the cash. They don't have to have another house picked out. They can have the house. We want them to have the house listed. It's not cheap. We charge them a point up front. It's full closing costs. But if you have somebody who wants to buy a house cash, I had a call tonight for one. We'll do that type of loan. We qualify them on the house they're buying only. And we'll give them their cash and go purchase the next one. They can sell it the next day. Our foreign national loans. So we do foreign national loans. We'll do 30% down. We can work with CPA letters, depending on what country they're from. We also have a liquidity loan. They have enough cash. We'll look at it that way. But our specialty, we can do them, and there's a number. You call me with where your client's from. We can take a look at it and see what country they're from. We have different guidelines for each one. But if they're from Canada or from the UK, we treat them as U.S. citizens. We give them the same rates, and we basically qualify them just like a U.S. citizen. So we look at their tax returns, the whole 9 yards. It is a great product. We're one of the best in town that does this, and the rates are incredible compared to everybody else because they're getting the U.S. citizens rates. My favorite is our liquidity loan. So we have a liquidity loan. They don't have to have the money with us. We look at a client. You've got a client. Mr. Jones just sold his company for $10 million, wants to buy a house, no longer has income. He's got money in the bank, but doesn't have income. If they have 2 times the income in the bank, depending what the loan to value is, we will base it off them having that 2 times income. So they have $10 million in stocks. We'll give it a haircut. Let's say we'll give it a 70% haircut. Comes down to $7 million. They have 2 times the assets. So they can buy a $3.5 million house. So it's very, very simple. We ask for 1 year's tax returns. We throw the tax returns in there. I have one that I just got approved that has a 300% back ratio. The back ratio we don't really look at. We just look at that liquidity portion of it. Jimmy, you got something to add?
Yeah, and keep on, one other thing. If it's under 40% loan to value, 1 time liquidity. If the loan is under 3 million, or excuse me, over 3 million, it's 1.5 million.
So there's all kinds of different. So if you've got somebody who's got a lot of cash and either doesn't have the income coming in or doesn't want to go through looking at 20 companies, returns and getting all that stuff together, it's a great product. We just have to, and again, the money does not have to be with us. We don't do any, the biggest problem I have with, well, I have to move the money over, you guys put something against the money, has nothing to do with the money. That's how we get our income with it. So it's a great product for some of these clients. We also will do cross-collateralization loans. We will look if you've got a client who's got a house, a big house that he owns that he's owned free and clear, and he's looking to buy something else. We can possibly we look at the client again. We're looking at the entire client. We may be able to do a loan against that house, just cross-collateralize both of them until one of them sells, till they sell one or whatever they want to do. We've got that option. If you have somebody who doesn't have a lot of liquidity right now, it's a great option for them. So if you got somebody along those lines, just give me a call and I'll kind of walk you through how we can look at that. On top of everything else, it's kind of like me rolling back to the old days. We also wholesale through a number of different lenders. We have all kinds of wholesalers that we lend through. I have DSCR loans. I have bank statement loans. So a DSCR loan is a client who is buying an investment property. All we look at, they don't show the income. All we look at is the actual property and what it's renting out for. It's a great program. It's not no income any longer, but it's as close as you're going to get these days. It's only for investment properties. The rate's a little higher, but I do a ton of them. I probably do 2 or 3 a month right now because it's so popular. Bank statement loans. You have a client that doesn't show a lot on their tax returns, but it shows them in the bank statements. We can actually put it through. You give me 12 months bank statements, 24 months bank statements. We'll tell you what the lender will give the client for income. We put them in there. Again, you're paying a premium for that type of loan, but it's a great product for somebody. Non-warrable condos. We do have some, for the right client, we have some ability to portfolio some of these non-warrantable condos, depending what it is. We can look at some. Again, we're not looking at, we look at the condo, but we're looking at the client and everything else they have. So it's not just the condo that we're looking at. Don't ask me about concrete restoration. We're not getting around that, but everything else, there's a lot of stuff we can work with. The insurance portion of it, we can look at some of that stuff for you. Our association loans. So, Maurice. So we will, and again, this is just timely with this talk today. We will actually lend to homeowners associations with these condos to help them do, if the reserves are low, they need repairs. Instead of hitting with an assessment of, I've got a condo in Miami right now where the customer came to me and said, we've got the assessment $70,000. You've got so many retirees in that condo, you're going to see a decline in that condo because of that. We will lend, if the association is strong, we will lend to the association and spread that up to 20 years. max up to 20 years. Instead of these guys paying an association fee of $1,500, $3,000, they can spread that out and do it that way. It is a great product. We're doing a ton of them. And again, it's very timely with this talk. But it is a great product for you guys. If you got one of those condos, you got a couple building. I know Patricia has a couple of them that we will actually lend to these associations and help them either do their concrete restoration. Now, the great thing with this product is if we have approved the loan, we're doing the loan, we will lend while they're doing it. So 20% down on the product, we will put in our portfolio because we know what's going on in that condo now. We know what's going to happen. We're watching them as they go along. So those condos that are no longer are lendable right now, we can lend in those condos. We'll put it on our portfolio till they are lendable and then sell them afterwards. So that's one of the great advantages to having a community bank with this kind of portfolio. So just to wrap up, so I do sometime weekly, sometime monthly text about what's going on. I mean, we all know rates, last couple, Fed cut the rates 0.5%. Everybody was great. We're going to see this market take off. And 3 days later, the rates went up and it's not stopped. We've gotten killed every day this week. So I give you an update of kind of what's going on and how it's going. If you guys are interested, and do my card, I think my last one is my card. All you have to do is text me tonight. Text me your contact. I'll put it in there. And again, I don't bug you. I try to do it on a Friday or right after the Fed meeting just so you kind of know what's going on with it. Or if some news comes out, if something comes out that's like when the loan limits go up to what they are, I'll just send you a quick text saying, hey, loan limits are here. I try to write it in a way where you can just forward it to your customers because they're calling you constantly, give me an update, what's going on with the market, should I buy, should I not? I try to make it as customer friendly as possible so you can just say, boom, sent, here's what's going on, thinking of you. I know you were kind of on the fence, here's what's going on today.
The new realities of older condos. We had this great panel in Miami that was extraordinary, and it's been one of the most sought after YouTube videos from Master Brokers Forum. It is going on, and it's a topic we're all debating and trying to find solutions for. So it is, really the discussion itself that's been extraordinary. It is my pleasure to introduce Andres Asion, the same amazing moderator. He's been very patient, by the way. He came all the way up from South Beach. Thank you so much, Andres. So Andres, in addition to being a Miami Master Broker Forum member for many, many years, is a resident of an older condominium in South Beach. He's been personally impacted by these issues. And with more than 20 years experience, Andres has been a prominent figure in the South Florida real estate market prior to opening his own brokerage. He led all development sales at Fortune International Group, where he sold over 40 developments, exceeding $10 billion in sales. Please welcome my friend and colleague, Andres Asion.
Can you yell one more time? She is excited. Yeah. So I'm super happy to be here. Again, I'm a member of the Miami Board of Master Brokers. It's such a great organization. I'm so glad you guys are part of it over here. Big shout out to Rich, City National. They're also an amazing contributor to us in Miami-Dade County. And with names like Richie Rich and Jimmy Money, I mean, come on. How do you not use these guys? But when I was listening to Rich give a talk and pitch all these amazing programs that they have, I was thinking, who could I use for this and who could I call for this? Honestly, we should be calling people, our doctor friends, our CPA friends, or whatever, and have that fresh call and say, hey, by the way, did you know that I can give you 100% financing to your doctor friends? Great excuse to give them a call with the programs that you have. So, Rich, we want to make sure that we have that cheat sheet for them to be able to do that. So with that being said, thank you again, Caroline. And hello to my fellow master brokers up here in the Gold Coast chapter. Yeah, I love visiting Fort Lauderdale, and I feel it's important for all of us to get out of our comfort zones. We're coming up here. You guys have to come over and visit us in Miami. There's a lot of stuff going on over there, rain or shine. And as Caroline mentioned, we had this discussion back in June, and it was remarkable. As a matter of fact, there was actually a tropical storm going on. We thought that we were going to have like 5 people show up, and it was a full house, so people were very excited about it. And I'm glad everybody showed up, and I'm glad that we're doing this again for the Broward chapter. We've updated a lot of stuff that we didn't have back then, so you're going to get a more robust, more information, and also cater to Broward and Palm Beach, which is important. So very important, 3 years ago, back in June 24th, was the anniversary. Today, now 3 years later, was the anniversary of our Champagne Towers collapsing, which was a pivotal moment for this momentous shift that we're seeing in policies, right? And we all remember where we were when this happened. And some of us were affected by some people that possibly passed away in that tower. We personally, in Miami chapter, have a board member that a sibling passed away in it. So it's been very tough, and many of us were very involved in helping a lot of those families. Actually, I'm on the board of this organization called Global Empowerment Mission, and we made sure to help by giving checks to many of the families that were displaced and help them find places to find a home while this disaster was sort of being remedied. So as the details of this collapse become more clear, government and industry leaders have taken decisive measures to ensure that our South Florida condominiums, particularly those near the coast and older than 30 years of age, were much better maintained, more regularly inspected, and by law financially prepared for the expensive construction and renovation projects that were to come. While these new requirements were made with the very best intentions, they have also created a very difficult, perfect storm of factors that deeply challenge South Florida's condominium associations, owners, and agents like us who represent them. Many condo boards have had to take hard looks at their resiliency, reserves, insurance coverages, and levy very expensive, often 6 figures, special assessments to the owners to satisfy these obligations. And I want to say that in my particular building, it's not 6 figures, it's 7. We will focus tonight's discussion around 4 main topics: the current state of play in the condo sector, the impact of past and future possible legislation, the polarizing issues of developer buyouts of older condos, which I'm sure many of you are seeing, and the positive steps we can take as realtors and brokers to help mitigate these issues. I look forward to another robust conversation with these terrific panelists. So with no further ado, let's bring them up. Greg Batista, seasoned structural engineer with over 30 years of experience in the field. As the founder and principal of G. Batista Engineering and Construction, he has led numerous high-profile projects specializing in building safety, structural integrity, and forensic engineering. I actually met Greg back almost 25 years ago when he was working with Related on the building Murano, which I currently live, which we're going to be talking about. Greg is a licensed professional engineer in Florida and holds a reputation for his expertise in assessing and restoring aging structures. He is also an advocate for improving building safety regulations, frequently shares his insights through public speaking and writing. He's written books. He's going to share a lot of information with us that we're going to be able to use with our colleagues and buyers and sellers alike. Then we have Spencer. Spencer is a real estate attorney at Schutz & Boyne. In 2020, he received an appointment from Governor Ron DeSantis to serve as Florida's condominium ombudsman from 2020 to 2023. He resolved thousands of issues in condominium legislation at the local and state level. How many of you had to call an ombudsman in any condominium that you lived in or heard of that? Can you raise your hand if you have? 5, 6 people? Cool. We're going to drill a little bit on that because I think it's very interesting. Next, we have Russell Jacobs, real estate lawyer with over 25 years of experience, served as legal counsel to a variety of companies and commercial entities. His firm is dedicated to real estate transactions, title legislation, corporate work related to real estate transactions, and represents numerous condominium associations. So we got 3 pros up here that we're going to ask him a lot of questions, and you're going to get to ask them a lot of questions because there's a lot of important topics going on. So to get right into the state of play in the condo sector, what exactly are condo developers, owners, and board members experiencing in this moment, and what advice are you giving them? Greg, you want to kick us off?
Well, the biggest advice that I can give any condo owners, because remember, I'm an engineer and a contractor, and I specialize in existing buildings. And, you know, what Andres was saying earlier about this whole Champlain Towers debacle and this tragedy, is that there are lessons to be learned here. And I've written books on the subject, having been intimately involved in this whole thing. And what I could tell a lot of owners and residents and people that deal directly or indirectly with these condos is that, look, the days are over where you can kick the can down the road, where the law allows you to take your reserves and do other things that are not associated with the actual. Now, I had a conversation with Senator Pizzo about a month ago, and he is on the same page. He says that he has little that he knows that this is something that has been going on for a long time, right? And now it's time to pay the piper. And I get the calls every single day of people who are literally sometimes crying and saying, "We don't have the money for this," right? And me as a person who lives in an HOA where my fees have come up, that I feel for that. But at the same time, we have to guard for the public safety. So if I was to say anything to these folks is, look, you got to find a way. You got to find a way to pay for these things. Because at the end of the day, we're talking life and death.
Agreed. I'll add to that. When I was the condominium ombudsman, I worked a lot with associations. I worked a lot with the unit owners. These days in private practice, I work more with investment groups and developers. So the perspective is a little different for me now. What I would say is that the investment groups and the developers are waiting to see what happens with the market. And what I can say is that I think the past 2 years, we've been talking a lot about milestone inspections and structural integrity reserve studies. And we're going to continue to talk about that. But the third topic we're going to talk about going forward is terminations, condominium terminations. That's something that we're going to be talking about a lot in the next couple of years.
See if this works. So right now, it doesn't feel like it, but we're in the calm before the storm. We've got about, I'd say about 4 or 5 months left, and then the proverbial poop is going to hit the fan. Polite audience. So at the end of the day, what we're going to start seeing is that people cannot afford their maintenance fees because they're going to double and triple based on what we're going to talk about today. And because of that, if they thought insurance rates were going up and that was going to strangle them, they have no idea what's coming. For older buildings that are higher than 3 stories, that have issues that Greg finds and other engineers find with reserve studies, those maintenance fees are going to double and triple starting in January. For some savvy associations who know how to play the game a little bit better, they're not going to start until the following January. But at the end of the day, they're all going to start. And the legislature has absolutely no interest in stopping this from happening.
Can you explain real quick why some now and some the following January?
Sure. So the main thing that we're going to talk about, because there's lots of different pieces to this, one of the legislations that passed, pieces of legislation that passed, is that where condominium associations would have something called full reserves. And the concept behind that is that when your structure broke, when your electric broke, when your plumbing broke, there was money in a reserve account there to fix it, so you don't have to special assess for it, right? And in this way, they just write the check and get the work done. And what the law allowed up until December 31st, 2024, the law allowed for owners to have a vote. And if the owners voted, you could waive that requirement for full reserves and have either no reserves or a partial amount of some amount that the board decided. And if the owners voted for it by a majority, you could waive the reserves and kick the can down the road for next year. And then if something came up, you just special assess for it. Well, that's no longer possible. What the law says is that budgets passed after January 1, 2025 have to have full reserves, and there is no waiving them for the structural portions of that project, which includes more than just structure.
So let me stop you for a second there.
Sure.
You just said January 1st, 2025.
Right.
So that means that every condominium typically does their financials prior to January. So that's why you're basically saying that whoever did, most condominiums do their financials, that it's not gonna affect them until really the next year's financials, correct?
If their lawyer read it right.
Correct.
Is full reserve defined as 10% of the operating budget?
No.
What is full reserve? What is the definition of full reserve?
Ooh,
That's
Greg,
a-
you, like, I could do it, or you can do it, or we can both do it. You want me to do it?
You're the
Okay.
lawyer.
I'm sorry, do you live in a condominium?
No, but I own some condominiums.
And have you ever heard of what is a reserve study?
Yes,
There we go. So let's talk on that.
So now, under the law, every 10 years, you need to do a structural integrity reserve study.
of course.
Okay, so what does this reserve study tell you? And this is something that Greg does day in, day out, all day long, right? You're doing 1 or 2
Greg is making big money now, people.
If you know any structural engineers, please tell them to send the resume my way.
He's a little busy right now. He definitely needs more engineers. So at the end of the day, you have different components of your building, right? You have structure, electric, plumbing, elevators, all that kind of stuff. Anything that affects structure, which they include as roof, plumbing, electrical, waterproofing, painting, all those things, they have a life to them, right? They don't last forever, as we know, in South Florida, especially in the 1960s when they used to build concrete structures and they'd take water. Where do we get water for the concrete? Well, look, there's an ocean. We can put ocean water in this mix this concrete. That'll be just fine. They didn't understand that salt. Never mind. Anyway, so here we are. So they take each component and you figure out how much life is left in that component and how much it'll cost when that life ends. So if your electric is brand new or your roof is brand new, well, maybe your roof's gonna last you, how long's the roof gonna last? For like 20, 30 years?
Depends on what type of roof.
That roof they use? Yeah, I knew you were gonna do that to me. So let's say your roof lasts 30 years and it's gonna cost you $300,000 to fix it. You're gonna divide that number by the number of years left for that life. And for every year that you have in that building, that year you're gonna reserve that amount of money, basically, plus a cost increase for the cost of living adjustments, because construction prices unfortunately don't stay the same over time. They just keep going up and up and up. So you gotta account for that. So you do that with every single component, and you come up with every year you need a certain amount of money so that when that component dies,
The big bank.
there's enough money, the big bank, right? I'm sure City National doesn't want those deposits at all. Right? You take those, right? Yeah, I figured you would. At the end of the day, that amount is gonna be dictated. So that's gonna be different for every condominium, based on what work they've done up to this point, what work they haven't done, what they do, how they do it. And so engineers like Greg are out there running around, making up the study and handing it over, so that before the end of this year, people can put budgets together with reserves if they understand what those are gonna be.
And Greg, real quick, full reserves, does that include what?
Well, there's, reserves is a very broad term, right? Because you can have reserves for your landscaping, right? But as far as the structural integrity reserve study, these are the components that are directly related to the structure. For example, you have your beams, you have your columns, you have, certain items such as your windows or it's all laid out in the law very, very specifically. So those components are put into what Russ was saying. And if you have $1 million that you need to spend in the next year, that the engineer determines that you have a problem, you have to spend $1 million in this next year. Why? Because it needs upgrading now. Then full reserves mean that you have to have that $1 million in the bank, in your reserves, right? So all of a sudden, all these associations are going, how are we going to get these $1 million, right? And that's where the stuff is gonna hit the fan. Oh my God, we're gonna do assessments. That's the A word, right? Or we need to get a loan. And that's where a lot of this.
That's where Rich comes in, people,
That's correct.
or Reese.
Included, you cannot waive those anymore. So what full reserves means is you have to put in the full amount for that year, and you can't waive it. Owners used to be able to waive it, and now after January 1, 2025, they won't be able to waive it.
And can Citibank lend
That's,
on it?
can you, hold on 1 second. Oh, I promise. We're gonna continue. You're gonna be able to ask questions later on. Whatever we don't hit, you're gonna be able to ask.
I have a really good book that I put on the chairs. It's called Structural Integrity Reserve Studies. But you can go to my website, askgbatista.com. I have a book that's, Structural Integrity Reserve Study, 40-year recertifications, milestones, pulling permits, windows, doors, all that stuff. And
But
it's
in
really
addition, also, when that check gets written from that reserve study, then they tap the unit owners, regardless, to refill that reserve anyways, because you can't just leave that void of that reserve, and you start having to continue to add the following year to it and add it to the budget, right? So, let me ask you something. What differences are you seeing, if any, between what's going on with buildings in Dade County, Broward versus Palm Beach? Are you seeing more leniency in one county versus the other? Are you seeing the same building issues across the counties? Give us some feedback, Greg.
As far as building concerns, pretty much everybody builds to the Florida Building Code. So if there's any issues as far as deterioration or problems happening, that's pretty much across the board. What happens is that you've got some jurisdictions that are more onerous than others. For example, you have Dade County, and a lot of you that are in the industry know that Dade County, that they're a pain in the you-know-what sometimes, even, for everything from submitting plans to getting inspections to doing all these things, and even just handing in a structural integrity reserve study, or excuse me, a 40-year certification or building they're really on you. As you start heading north, for some reason, it gets more lenient. Like in Broward County, okay, the Broward County comes in, they learn a little bit about what's going on in Dade County, say, okay, let's do thermography studies, let's do all this. You get to Palm Beach County, things start coming left. Now, from Palm Beach up north, they tend to be more lenient. But as far as the damages and stuff to the buildings, that's pretty much right across the board.
You guys, Spencer, not specifically on that topic, but you've gone through a lot of situations with condo boards and financials and elections. As an ombudsman, you're regulating a lot. Condo owners call you when they think that there's an issue or when they want you to regulate something, and you were the head guy for the state. Can you give us some issues that maybe you've seen that we should have a red flag to, or educate us on when we should call on an ombudsman in general?
Sure. So I think that people tend to be pretty apathetic until money is involved, right? So until your assessments are skyrocketing or there's a special assessment being considered, people tend to not go to the board meetings, people tend to not be involved, and then things get a little crazy when the person's going to be hit. So the Ombudsman's Office is a great resource. It's within the DDPR, which I know you all are familiar with as brokers. Provides a variety of resources to condo owners. One of my favorite things that the Ombudsman's Office does, and I'm not the Ombudsman anymore, as you said, but one of my favorite aspects of that office is the ability to monitor condo elections. So if 15% of unit owners send a petition to that office, the Ombudsman's Office appoints a monitor anywhere in the state to physically go out and conduct the condo election. And we had really, really great results with that program. We were able to throw out boards that had been there for many years and refused to do elections properly, and we were able to get out some corrupt boards that way. I think that answers it. Was there anything else?
Yeah, no, just have you seen anything in your tenure when you were there that was a red flag that you were like, you should look out for this or that? Is there anything that jumps out to you?
I would go to the board meetings. I guess a big red flag would be if you have a hard time getting records, access to the financial records. That would be a big red flag to me. If I make a record request to view the official records of the association and they try to obscure them or they don't really want to work with you, to me that would be a red flag.
And at that point, should I call the ombudsman's office?
Call the police? No, yes.
Well, actually, something did call the police, as a matter of fact. Were you the ombudsman when there was the election in Aventura, when that recently this guy just finished getting arrested?
Yes, that was in the news, so I can talk about it. It was Turnberry on the Green. We actually were there. We monitored that election. It was a pretty wild experience. It was like people were really going crazy. And the president, I told the unit owners, I'll give you a fair shake at the election. I'll make sure that election happens fairly. Unfortunately, that president who was just arrested stayed on the board. I think he probably intimidated so many people to vote for him. He made them sign ballots in front of him or something like that. But yeah, unfortunately, we were not able to get him off the board that year, but now he's off the board.
Interesting. So last month, Governor Ron DeSantis publicly encouraged Florida lawmakers to address the condo crisis this year after the state's Senate President and House Speaker rejected calls to make a fast change to the existing legislation, which is basically the legislation that was changed to deal with the Champagne Towers. It's kind of like on a hold. So we surveyed master brokers and asked if the governor should just commit to calling a special session himself. And you put that up there. So 75% of you said that he should, and hopefully something's going to happen sooner rather than later, because really this perfect storm between buildings trying to update their structure and at the same time having them forced to come up with reserves the way that they are, instead of staggering it a little bit more, really is creating a huge financial crisis for a lot of unit owners. I'll tell you that, and I live in a building that is fairly young, 24 years old. It's called Murano Portofino, 1000 South Point in South Beach. And we have a special assessment right now for about $35 million just on the structure and waterproofing and the outskirts of the building. And we're gonna probably get hit with another like $35 million special assessment on top of that to beautify. So it's gonna be a $70 million special assessment, on average about $200,000 to $300,000 per unit owner. So, you know, it is affecting many people across the board. Condo developers, buyouts, let's talk a little bit about that. Developer buyouts of older condos seem like it's a promising solution for a lot of stakeholders in this moment, but the appeals court ruled from this past March regarding Biscayne 21, which is the old name of the building. They're promoting it as the addition. Currently it's being sold. Building in Miami that has put the entire process in limbo. Thoughts on the case and the impacts for future buyouts?
Sure.
Spencer?
So this is part of my practice. I represent developers buying out condos, terminating condos, redeveloping them. And I actually think it's one of the best solutions for these situations where there's a huge special assessment that the people can't afford. Usually it's going to be people on fixed incomes that are already retired a lot of times. I think these developer buyouts and condo terminations is one of the best, most positive end results for these buildings. And just to touch on that case, the Biscayne 21 case, I think this was the wrong decision that the court made, and I think that we'll see what happens. But basically in that case, what happened is a developer did something that has been fairly common throughout the state, which is buying up enough units to change the vote needed to terminate the condo. So some condominiums require 80% votes to terminate the condo so you can redevelop it. Some condominiums require 100%. This one required 100%. But the developer said, okay, well, if I buy enough units to amend the governing documents, I can just amend the governing documents and lower the threshold to terminate. And that's something that's been a common practice.
So your argument was?
I'm sorry?
What was the argument from the?
Right, so the argument that ended up winning so far is that by having an 100% threshold to terminate, each unit owner has what's effectively a veto right on a termination. And by changing the termination threshold, you took away that veto right. And that was improper based on the governing documents. I think that the legislature I think the legislature wasn't happy with that decision because you're taking away the power from the majority, right? I mean, I think there was 96% of people that wanted to sell to the developer, take their paycheck and run, and a few of them were able to stop it. So
And those few typically just want more money. My guess is that they're gonna settle, get their money, and they're delaying the process, but at the end, hopefully that happens.
Yeah, so, I mean, just to address a couple points that you were making, which I think are important to help everybody else, because this is your business. And to try to make this more relevant to you and what you're doing. Condo terminations are gonna become more important. You're gonna have older buildings where those maintenance fees we're talking about double and triple. People can't afford it, they're gonna start getting foreclosed out, and they're gonna need a rescue. And so it's gonna come to the real estate agents to try and help figure out what a price would be and get a developer in there to buy out those units and then go in there unit by unit and get them to sell. those units, because that's how a termination is done. A termination is done as unit by unit by unit, where they consent to a regular old purchase, but all to the same developer. The developer can amass a high enough percentage to basically terminate the declaration and cancel the condominium completely and turn it back into essentially either an apartment building or vacant land for redevelopment. So if you want an opportunity, you have one coming up. It's going to start in about 5-6 months from now. You're going to start seeing it. It's going to happen over the next year or 2 or 3, where people are going to really be suffering, and what they're going to need is a rescue. And you're actually, if you're interested, the people that can actually make that rescue happen. And the best thing in the world would be a win-win, right? Where all the unit owners are able to get at least market value, if not better, for their unit, but the developer is getting the entire building for less than land value. That is a win-win.
And by the way, be vigilant. When you see buildings like this and you think they're going to be target that can be possibly a good developer buy, you could be involved in that. Reach out to me. I have a lot of contacts with a lot of developers that want to buy these buildings. I'm sure we can work on getting a deal done. So think about the positive on your side during these situations, because there's a lot of opportunities to make money during these situations.
Yes, I just wanted to add, great point, Russ. This is a win-win most of the time. A lot of people hear a developer buyout termination, this is predatory. The evil developer is coming out to prey on the retirees. Not true at all. A lot of times the developers are able to offer the fair market value, and a lot of times plus even higher than the fair market value, because they're going to be able to make more money with that land after they redevelop it.
Does the developer have his own clients go in, or his own agents go in and offer for the entire building?
Yes, so typically,
25,
typically what ends up happening is a developer has a rep there's a lot of different situations. A lot of situations, somebody comes in and says, hey, we got the association that's sort of already going to buy in to go ahead and sell, and they'll pitch that proposal to different developers. Other situations, which happens a lot, a developer goes and says, hey, we see this opportunity in this building because we know that they're going to be going through very strong special assessments. Somebody contacts the developer and says, hey, we know that this is happening. They typically have a rep, and together with brokers go in and try to have, first get the sense of the condo association board and say, hey, how are your residents feeling about this idea? They'll typically bring in an attorney. They'll have a meeting amongst the association, feel them out, and then invite a developer to come in, present their thought process, and then go from there.
Yeah, but that one developer has its own agent. That pretty much.
No, the answer is no, because if you have a building that you know that you live in personally, and you say, hey, listen, I think there might be an opportunity here, you can reach out to somebody like me or to a developer that you might know and say, hey, I have an opportunity here, bring me on board. I could, you could say, hey, I'm going to charge you X amount to try to help work out these deal structures for these buildings. It happens all the time. I've done it before. I'm happy to guide you through it.
I think that happens a lot, where you can have an agent go in there, look at the building, look for 40-year-old buildings with crumbling concrete that are higher than 3 stories, that are in a good location where someone would want to redevelop it. And you go in and have a couple conversations, see if there's anything there, and then you can turn around and find the developer yourself, or with Andres or me or Spencer or anybody who's involved in this and knows what they're doing, and say, I've got something. Make sure you get an NDA, sign a non-disclosure agreement so that you protect your commission, right, non-circumvent, and make sure you protect your commission in that instance. But yeah, if you found it and you have it together, the developer doesn't have their own agents. They usually have to hire an agent, so it's somebody they know. But you got developers, out of state, not in the area, who, are looking at projects or opportunities. So this is really an opportunity that you could pick up if you have enough energy to do it.
Yeah. So we had a poll. You want to put that poll up, asking master brokers what they thought if this was if this was good. So here we have it should be easier. A minority of residents, 40% said should be harder. Developers are already taking advantage of desperate sellers, and bars should be set higher for them. That's the thought process prior to our conversation.
Is there a percentage of the building that you guys are thinking about, 30%, 40% of buildings that are higher?
30% that are finished the thought.
Well, would you say 30% of buildings that were built in the 60s are going to transfer ownership?
I don't know, that's difficult, that's a lot, that's a big number. I don't think that-
Yeah, so.
I don't know, 30% is a big number.
Yeah, I mean, a lot of them are gonna save themselves, it's all gonna be case by case. Some of them are gonna, have done work, like poor Andres is going through a very tough special assessment for himself right now for his 25-year-old building. But actually, it's kind of smart if you guys do it now, because if they get the work done now, when you go to have your reserve study done, the construction, the life of your concrete's gonna be long,
Right.
and therefore your maintenance fees are gonna be lower because your reserves are lower, and you're gonna end up surviving, so. there's
I'll
lots
give
of-
you an example. This building, which is gonna go through a $70 million special assessment at the end of the day, how many units do you think are on the market? How many people do you think want to sell in this building that has approximately 200 units in the building? Anybody want to take a guess?
45.
45 units for sale? How many? Anybody else? 20? 4. 4. It's incredible, but the people love the building and they love the area. So they're saying, hey, we'll write the check because we love this building so much and we love the area. That, no, they already got hit for, trust me, I already paid $175,000, so we already paid half. We're coming up now with the second half. And the building's not even offering financing for that. I actually tried to call, City National, but the association was like, no, we don't want to take out a loan. So if you want to take out a personal loan, you can do so. But that didn't happen. So regardless, there's a lot of people who really love their buildings. And regardless, they're gonna pay it out and they're gonna write it through because they
But it's not a
realize.
question of whether they love the building. He brought up, they're on fixed income. So a lot of these people.
Right, and they'll turn around and they'll sell it. They typically have a good amount of equity. Now, my thought process, which I wanted to bring up to the governor's office, is that a lot of the reasons why these people are not moving is because they don't have portability of their homestead exception. And if there was some type of portability on the homestead, they could say, hey, I could port all this, savings that I have into another property, that might help them on their move. So there's a lot, if you guys have ideas, share them with the governor's office. If you come up with something, share them with me, share them with the governors, make your voices heard. We had 2 people that were very vocal that wanted to ask questions, and I'm glad you did because hopefully we got your answers. Anybody else have questions? Yes, please.
I remember a year or 2 ago that they were saying that they were working on it required condo rules, regulations, budgets, they're supposed to be public information. Is there an update on that? I know how to.
Right, so Miami-Dade County is actually, he was asking of buildings that are making their financials public information. Miami-Dade County actually has an office, could one of you speak about that? That are posting information on the website, they're requiring it?
I can do it. So there is some information, but it's mostly like how many units are there, the name of the association, so Miami-Dade can keep track of what's going on. But the budgets are not being public, they're still not public. You have to be an owner in the building to get access to it. So right now that hasn't happened yet. And if they did, it would be a lot easier for developers to go in there and start swooping in to deal with it. So that could be a reason why they're not going to do that. Because they're trying to let associations save themselves if they can.
We got 3 minutes. Anybody have
Did
any?
you say the frequency of the reserve studies, 10 years?
10 years for the SIRS, Structural Integrity Reserve Study.
We have another question, please, ma'am. Smaller buildings under 3 stories, what are the regulations for them?
This applies to larger buildings, there's an exception. So if you have, for example, a single-family home, a duplex, a triplex, then those don't fall into that. So they wouldn't be encumbered by those regulations.
So you just have to make sure that that building that you're living in, that you're involved with the board and making sure that they're actually doing their upkeep that is necessary. Like if you owned your own house, people think about that this is just happening in condos, but people in their houses need to change their roof, change their plumbings, change a lot of things that happen in their house, which same thing happens in condominiums. Any other questions? Sir, please.
In the rush to complete everything, everybody's going down the same funnel. How are they going to meet the timelines, and who's going to monitor all the associations?
That's going to be a huge job. Who wants to take that?
Well, I think it's the job of the state to monitor that. I don't think they have the resources or the ability to really, at this point, keep track of all of this information. they're trying, they've created databases, but I worked for the state for almost 3 years, and it's gonna be tough to keep track of all that information.
Do you want to be the ombudsman again?
No.
Well, you're talking about monitoring, I mean, it's part of the, the ombudsman and DBPR, but as far as like the actual construction and all the engineering that's gonna go into place, which I'm going crazy right now, it's because I see the tsunami coming.
Yeah.
But it's gonna fall a lot on the building departments, the building officials, the inspectors, where right now, they're already up to here. So, when this tsunami hits next year, I don't know what's gonna happen.
By the way, talking about opportunities, sometimes people ask me, Andres, with all these condos and pre-construction, what do you think is the right opportunity if I wanted to buy something? I tell them, find the ugliest building that can feel is, going through a lot of troubles in the best location and invest there. Because the opportunities there is most likely someone's gonna end up trying to buy out that building. They're gonna pay more than market, and it's gonna be possibly a decent investment. So consider that, look at those buildings that you're like, wow, that building has an amazing location and is not doing great. And typically, those buildings are selling for not your prime time numbers that you might have investors that are looking in that price range, and that might be a great opportunity for them. So when you're speaking to your prospects, listen out, pay attention to what they're looking for, and then try to find the right opportunity for them. Anybody else? Awesome. Well, Master Brokers, thank you. I hope you liked this conversation, this dialogue. Greg, Spencer, Russell, thank you again for making this long drive and joining us. You wanted to say something there?
Well, first of all, I'm just gonna have a cup out here in case you wanna help donate for a special assessment. I did.
I'm good.
I know. I did prepare a cheat sheet for, if you're interested in it at all, on what you should be looking at in condos. It's what I tell all the realtors that I work with and the owners who are looking to buy. And it's really just like a 18 hot list items of things you want to know about a condo, either on the listing side or the buying side. I have a couple of them. I have like 20 or 30 of them here. So you come see me after. I'll be happy to hand that out.
That's awesome. And also, there's about 5 or 6 City National team members that are here. If you have questions for them, talk to them. They're amongst us here. Thank you again, City National, for always being such a great supporter. Thank you, everybody.
It's basically,